Good morning everyone, welcome back. So last class we were continuing our discussion on banking sector issues. We were just started the topic of NPA. So let's continue the talk. First topic for the day is NARCL and IDRCL model. What is this? What is a bad bank? Understood, you know. What is a bad bank?
The government owned entity which purchases NPA from banks.
What is asset reconstruction companies? He is saying bad banks are government owned entities that purchases NPS. Now what is asset reconstruction companies?
Now these are the companies which will recover
These bad loans are also a part of asset reconstruction companies. Who regulates ARCs? RBI regulates ARCs, and ARCs is a very broad category. It is not just government owned entities, it has private ARCs also. There is Reliance ARCs, like not Mukesh Ambani, Anil Ambani's ARCs is there. So ARCs are not just public, it is private entities are also very much part of it. ARCs is a very broad market, it was existing for a long time. Now bad bank is specialized banks which will take over the NPA from the commercial banks or scheduled commercial banks. Clear? Now what is NARCL and IDRCL model? Now what is issue with bad banks? NPA is there. Now if a bad bank go to take the NPA, what is the issue they are facing? Haircut. One is major issue is 90% haircut में ले रहे. 90% haircut means what is the point of 1000 crore लोन को 100 crore देके लेना है bad bank को. नहीं तो bad bank को profitability नहीं है बोल रहे. So this was like stuck for even though idea is wonderful because NPA from the bank's balance sheet it will be cleared. Now a specialized entity you can make the expertise for recovery of the loans for these specialized entities. So everything idea was very great, but due to some major issues pick up नहीं हो रहा था. Now इसका solution था PARA. What is PARA? PARA is simply a bad bank, but it will be public sector. When government is involved, what is the advantage? There is sovereign guarantee, there is huge amount of how much private sector can mobilize, huge amount of fund government can mobilize, much more. So due to these reasons, if bad bank has to succeed, there should be a role for government. PARA was proposed by Economic Survey before. Previous chief economic advisor also was advocate of having some PARA. Now government then came up with NARCL and IDRCL mechanism. What is specialty of this mechanism? Is government giving all the fund? Two companies are there. NARCL means what is their function? It purchases bad loans. Now what IDRCL will do? It try to recover value from this bad loan. So first part is done by NARCL. Okay? Now what NARCL does, let's understand from this example. Suppose, no need of example also. Suppose a bank is there and it becomes a NPA. 10 crore loan become NPA. Now this bank has to remove this 10 crore from its balance sheet. So the bank will sell this to NARCL. Will they sell this for 10 crore? There will be some haircut. Haircut means NPA कितना का है, the asset reconstruction company कितना में ले रहे, इसका difference है haircut. Now here the NARCL is taking it for 6 crore. That is 40% or 4 crore क्या है haircut है. ठीक है, suppose bank accepted this haircut, then they will transfer the NPA to NARCL. Now what bank will get is not this pending 6 crore. बैंक को ये 6 crore भी नहीं मिलेगा, बैंक को क्या मिलेगा 15% upfront funding मिलेगा. 15% of this 6 crore they will get the funding as soon as they sign the deal. Now बाकी 85% what bank will get? Security receipts. What is security receipts? Before coming into guarantee under, what is security receipts? Now bank has given, see 15% is 0.9 crore. Now 0.9 crore bank got the money. Now bank has to get 5.1 crore more. ये कब देगा? This is कब देगा means security receipts. Security receipts has a period of 5 years. In 5 years, you can redeem the security receipts and get your 5.1 crore. By this time, IRDCL will come and may recover this 5.1 crore and get the XYZ amount to the bank. Now, what is the underlying assets of the security receipts? NPA. Why you are coming to guarantee? We will come to guarantee. Don't too much confused. We are not touching government right till now. Now, security risk, NARCL came, they took over the loan for a haircut, 15% fund दिया, 85% के लिए security receipts दे दिया. This security receipt can be redeemed within 5 years. And within the 5 years, IRDCL will come and try to recover this amount. And if they recover, they will give this money to the bank. All happy? Now, if they cannot recover, what will happen? Suppose they can only recover 4.1 crore. So there is a gap of 1 crore rupees. This 1 crore rupee, government told that government will give. Whatever and these guys can recover, how much is told, that is guaranteed return. If that guaranteed recovery cannot happen, then government will fill the gap. This is called government is giving sovereign guarantee to XYZ security receipts that is being offered. इसका advantage क्या है? Banks will have confidence. At least they will get their money. Okay. So this mechanism has technically very wonderful mechanism. Why? One problem was bank was reluctant to sell. That issue is addressed because bank has some assurance that this much security receipt कितना मिल रहा है उतना पैसा मिल जाएगा. Second issue was less haircut तो है, और if a bad bank is created by fully government owned entership, then what is the problem? Government has to give all this money, 100% money government has to give. So that kind of a bad bank has to work, government has to put so much of investment up front. Here government doesn't have to give too much investment का कोई काम नहीं है, only this gap when it comes, then only government has to interfere. Government has to focus more on making the expertise, making this organizational structure effective for NARCL and IRDCL. These kind of thing government can focus instead of putting too much money on the upfront, getting the work done. Kind of a very wonderful solution for addressing so many issues that was happening within this period. NARCL is a public ownership company with 51% of ownership will be with public sector company, public sector banks. It has this RBI ARC license. ARC I already told they are regulated by RBI. Incorporated under Companies Act. This is also incorporated under Companies Act. This is a non-governmental company. That means 51% of the share is with private. Why it is kept like that?
People they have more expertise, they are more enterprises.
Here we need more expertise. What is more beautiful with this scheme? Ownership is given to public sector banks. They are problem creators, they are made responsible to solve the problem also. It is not like government is sitting over it. Huge amount of responsibility is given to public sector banks also. So everything is good. What is issues with this? What is issue NRCL or IDRCL is facing? Even this organization all to work, these are new organization. There is no institutional memory, institutional history. It will take some time to pick up, to get this trust going, to get this expertise growing. So this time lag is there. It is only phase 1 of this NARCL takeover is only going on. Go ahead. Clear about security receipts, what is exactly government guarantee? Somebody's made a wrong statement, you can at least able to identify this is wrong. Conceptually it is 100% clear. Okay, go ahead. Now these are some facts about this NARCL and IDRC. It is mainly for stressed NARCL we are speaking about, for loan assets above 500 crore. Minimum amount is this much, and 2 lakh crore government is trying to acquire through this organization. There is phase 1 and phase 2. Phase 1 is 90,000 crore, that is being processed right now. Now what will be capital structure? It will be like bank equity will be given to banks as well as non-banking financial companies. NBFCs are also a part of it. Debt required government guarantee will reduce upfront capitalization. That is what we were discussing so far. What else? These all are very facts. You can even pause the video, just read this and you can get the information. Then how this resolution is working on? And there is a limit to how much government guarantee is giving. There is a limit, that is 30,600 crore will be the limit of government guarantee to the security receipts. Now if this limit is also being crossed, then that means your institution is wrong. Then government has to think of reworking the institution. Institutional issues is there. So this is like a broader limit. Most probably this much of security receipts guarantee will not be required. I think that is for total of NARCL. Go ahead. This is all what we have discussed. The same thing is written here. What is prepacked insolvency resolution process? This is little old. I don't think technical question can come from this. Only those questions can come. What is the basic objective there, like that? What is the point of this? We have IBC, insolvency and bankruptcy code. So under this resolution is happening, then why we need something like this, prepacked? What was the objective of shifting into prepacked?
Because of this COVID crisis, a lot of MSMEs, they were badly impacted.
Exactly. We have this IBC working, it has been working for 4 years very good. Then came the pandemic. Then pandemic happened, there has been massive impact on, especially on MSMEs. Now if IBC route is used, then what will happen? No, IBC can be used for MSMEs also. Now if IBC route is used for resolution, then what exactly will happen? This very strict method. The control will come to creditors. This group of creditors is exactly controlling the XYZ. समझ में आ रहा है? Group of creditors is company will come into this. They will then finalize the XYZ plan. That means who have taken the loan, who is the original management of the company, they will lose the control of the company very easily. Now if you in a pandemic time, who have taken the loan need some support, need some extra time, need some flexibility in whatever XYZ process we have. To incorporate that, we have this pre-packed scheme. Here the who have taken the loan management of the company can keep the ownership of the company. They can make a resolution plan themselves and they can work it out and make the processes instead of company taking over by management, taking over by group of creditors. So they are giving a flexibility to run the company even by relaxing some provisions of the IBC. Okay. Too much technical I don't think is required. If you want, you can note it down from here and you can read this. Go ahead. क्या हो गया? All good? Now we have prompt corrective action framework. What is this? Why, where it will be used? When there is a stress in banks, RBI has responsibility to protect the bank, to not create a situation like bank run. So to ensure that, what will happen? Before that situation come, there should be some standards kept. If this is happening, then banks will be kept under stress is being identified, then banks will be kept under PCA framework. Now this identification as threshold 1, threshold 2, threshold 3. This means there is less number of stress is there. Highest different grades are there. If this is there, the action will be different. If this is there, action will be more stringent, and this is there, action will be extreme will be taken out. And what is these extreme actions? Even all the crediting system of the bank will also be controlled. New branch नहीं खोल सकता, कुछ नहीं खोल सकता, इतना within the limits bank को रखेगा if it is having extreme risk threshold. Now what we have to learn is the basics you understood. It is scheme by RBI. Purpose is to understand the stress level in the banks and keep some precautionary measures. They will exactly threshold levels are there and what action should be taken is the defined. Now what you have to learn from the theoretical or conceptual perspective is what are these different terms. Out of this, first one is CRIR. What is it? No, what exactly the technical term is? Capital risk adjusted ratio. Capital risk adequacy ratio, that is CRIR. Then CET1 is tier 1 bond, tier 1 capital, actually said that. Net NPA we already discussed. It is net NPA here it is used, not gross NPA. Wherever you newspaper NPA is falling, all you are seeing is gross NPA. Net NPA is only used in case of we are analyzing the health of the bank. In that case we use this net NPA. Then what is ROA? Rate of return. How much a one capital is making, profitability of the bank, that is basically objective of this. So what you have to know is there are 4 different variables that is being analyzed and these are the 4 different variables. If number is changed or any other variable is infused, all this you should have to identify this is wrong. Only these 4 variables are used and these numbers you can forget, don't need to learn too much of this. Go ahead. Now this we will see in detail all of this. Now capital to risk weighted assets ratio. It is also called capital adequacy ratio. What is it exactly? A measure of banks available capital expressed as percentage of banks risk weighted credit exposure. And what is this capital talking about? They are talking about basic equation is this: CAR or CRIR is equal to tier 1 capital of the bank plus tier 2 capital by risk weighted assets. We will see this in detail. Tier 1, at least for now, understand that CRIR we are talking about is tier 1 capital plus tier 2 capital by risk weighted assets. Now what is tier 1 capital? What is tier 1 capital?
These are issued by banks, and it is not the liability of the bank to pay the principal.
You are speaking about additional tier 1 bond, additional tier 1. Tier 1 capital is not directly or not fully related, same. We have different capitals of the bank. Suppose if a bank run like situation happened and bank has this tier 1 capital, 100 rupees as tier 1 capital. Now bank can take all these 100 rupees and give it to the bank run situation and address that situation, that risk situation. That means kitna paisa idhar hai, that fully can be used for if any risky situation come, that can be fully used into addressing the whatever risk bank is facing. In case of tier 2 capital, what it will be? It will be some form of maybe government security, some other investment it will be. Even though it is liquid investment, it may not be not fully available for the bank for addressing whatever the risk if a situation comes the bank is facing. Conceptually clear? If whole of the money can be diverted into addressing the risk, that capital we put it as tier 1, otherwise it is tier 2. Now which all capital come under tier 1? That is core capital, it is also called core capital of the bank, equity capital, ordinary share capital, intangible assets, audited revenue reserves, all this come under tier 1 capital. Now in tier 2 capital it will be retained earnings, unaudited reserves, general loss reserves, these are coming under tier 2 capital. Don't overdo over research. This much is fairly enough. These are very technical terms. There is no way UPSC will ask difference between tier 1 and tier 2. But for understanding the overall picture, just understand this. Now the risk weight, the lower part of the equation, that is risk weighted assets. That is, what is assets of the bank? Basic assets of the loan is what? Loans. Now if a loan is given to me and loan is given to some other person, depending on whatever is my credit score or credit worthiness, that risk weight will be assigned to it. Suppose if I am a person who is paying high loan, my weighted weight will be 0.9. That means most of the loan might come back. So this 0.9 of the person can be taken as asset of the bank. If a person is not that much paying the XYZ loan, not having that much of his, there is more risk associated with this. So 0.3 will be taken, 0.3 will be taken out, 0.7 will be his weight. So like that, if you divide all the bank's asset based on however risk they is facing, then you calculate the risk weighted assets, then you divide both these, that is how you are finding CRAR. Now what are the risk bank is facing? Only conceptual knowledge is required here also. What are the risk bank is facing? Bank is basically facing 3 risks. One is operational risk, credit risk and market risk. Credit risk is somebody take the loan from the bank and भाग गया, वापस नहीं दे दिया. That risk is called credit risk. वापस loan दिया, वापस loan नहीं आ रहा. That is credit risk. Market risk means some market situation happen, forex reserve change हो गया, inflation बढ़ गया, या government ने fiscal deficit कर दिया, ऐसे कुछ करके that is impacting profitability of the bank, that is impacting risk bank का sustainability, that risk is called market risk. Now the third one is operational risk. Operational risk means human error किया, fraud किया, कोई fraud किया, या process risk था. Process risk का example बोलो, नीरव मोदी केस, इसमें वो स्विफ्ट कोई फॉलो नहीं कर रहा था, स्विफ्ट में वो ब्रांच वाज नॉट रजिस्टर्ड इन दिस स्विफ्ट, बैंक का अकाउंटिंग सिस्टम में रिपोर्टिंग नहीं चल रहा था. So this kind of process risk, fraud, IT risk, human risk, all this will come under operational risk of the banks. Basic conceptual clarity is required, beyond that not too much. Go ahead. Now what is there PCA for NBFC applicable for NBFCs also? It is. There is PCA. This is not same PCA. There will be some technical differences. Numbers will be different. Variables will be different. But PCA is there for NBFCs also. Now what is NBFC PCS? Variables are same. CRAR, Tier 1 ratio and net NPA. Who is not there? ROA is not there. What is ROA? Rate of return or rate of return on assets. That is indicating profitability of the XYZ bank. This is not a part of NBFC PCA framework for NBFCs. Then Baki all same, and we have 3 different thresholds. We have different numbers depending on threshold. You will categorize it. Go ahead. Is there PCA framework for cooperative banks? There is a very similar system for cooperative banks. It is not called PCA, it is called supervisory action framework. That is, supervisory action framework is for urban cooperative banks basically. Same 3 threshold is there, same as NBFCs. There is net NPA, profitability is there. That means rate of return will be there, CRAR is there. Okay. This is maximum number of data you should at least remember. Baki percentages is not required for exam point of view. Go ahead. What is Daksh web portal or web system? बताओ. Daksh सुना नहीं है कभी? ठीक है. NBFCs has to report their compliance report to RBI. Now for reporting this, they made a specialized web system, that is Daksh web system. Very factual information. Go ahead. Basel III norms. What is Basel III norms? Who releases this? BIS. We are not discussing too much into this. You can read, these are very factual information. Similarly, we had discussed there is PCA framework, there is different categories. This much amount should be kept as Tier 1 capital. This much same level, specialized standards will be given to it. Okay. What is additional Tier 1 capital? When this was in news, Yes Bank issue was going on, or Yes Bank crisis was going on. It is during that time we had seen this additional Tier 1 capital. What is this exactly? These are perpetual bonds. What does that mean? Exactly, no maturity period is there. These are infinite maturity period loans. Now, what is the issue with infinite? Like this is now we are talking about something economic concept. We cannot keep something as infinite. Some kind of take and this some kind of check and balances should be there. Now, what is check and balances for additional Tier 1? Let's see. They have no maturity. Thus, they are called perpetual bonds. They are riskier than various debt instruments. These can be written off. In case of bank faces financial troubles. Remember Yes Bank fiasco where such bonds has to be written off completely. If it has caused losses to funds holding. Okay. So what is the characteristics of this fund? Even iska interest can be written off. Coupon which we speak about. Bank can decide that coupon nahi de dega. Or bank can even say that principal bhi nahi dega. नहीं तो principal cut करेगा half. Bank has absolute flexibility to play with this bank. Then why should people invest in this? High return it will give. And India में bank run is a very rare incident. The Yes Bank में हो गया, but that is not something which we hear in everyday. So that's why interest is still there. Now what is this infinity? How it is? These bonds have a call option date. Typically once every 5 years. So even though it is an infinite bond, bank can call back this bond after every 5 years. Bank has the flexibility to take that decision. But if an option came like this, its maturity is infinite, then the option is correct. Okay, even though maturity is infinite, there is an option to call back the XYZ bank every 5 years. This gives insurer an option to redeem these bonds. They pay back investors in 5-time year framework. Go ahead. These are basic things of additional Tier 1 bond. They are perpetual bonds, but there is a callback period of 5 years. Now, what is other thing? They are riskier bonds because bank, if face a risky situation, bank can do anything with this bond. They cannot pay the interest, they cannot pay the principal, they can cut off the principal. They can say, अब जाओ आपको कुछ नहीं मिलेगा. Even that is legal. Still people invest because it is giving high rate of return and bank run is not such a common phenomenon in India. Go ahead. What is domestically important, systematic important banks? DSIBs. If this collapse, if this institution collapse, its impact will be felt throughout the economy. So what we should do? We should give strict provisions for this bank. Stress assessment है या वो ratios है PCA का. There should be strict assessment. More auditing should be there to these banks. Okay, maybe higher level of credit ratios should be maintained by these banks. All these steps we need to take. So these steps, depending on intensity of these steps were to be taken, we categorize some banks as credit ratio, that CRIR tier 1 capital itna hona chahiye 6 because RBI can give higher percentages for this bank that is declared as domestically systematically important banks. So if an option come, if the statement is inclining that it is, idea of the statement is improves the sustainability of the bank or improves the performance of the bank, then that bank we put it under that bank, that statement we take it as correct statement. If some statement is there which says that the ratio will be reduced for these banks or more flexibility will be given to this bank, so this flexibility is having some association with sustainability, then that statement will be wrong. That basic concept you should know. Now 3 banks, these banks are not there. Only 3 banks are categorized as a domestically DSIBs right now. That is SBI, ICICI and HDFC Bank. Now another factual information is this bank has a size of over 2% of GDP. Complexity, these are other factors which should be taken into consideration, that is interconnectedness, complexity, size, sustainability, all these factors will be taken into consideration. Now there is another category of domestically systematically important NBFCs. We are not discussing in this class, go ahead and just search about it, otherwise we will discuss it in the next class. There is similar category for NBFCs also. Everything we will do in next class, not now. What is BBB? Bank Board Bureau. Bank, not bank assets. Higher appointments to higher level like CEO or MD, that level of appointments to the higher level banks. That was it was envisaged with that function. It was formed in 2016. It is not, the appointments was not the only function. Selection of chief of the banks, capital raising plans, even operational plans they had, their recommended appointments, they have act as a guide in XYZ actions to be taken. Even in the operations and expansion planning in this aspect also, BBB can give some recommendations. So it was a much powerful body that was created. Now अभी recent development क्या है इसके बारे में? There has been a High Court case and Delhi High Court came with saying that position of general manager and directors or insurance company BBB cannot recommend. इसको invalidate किया because of some legal complications. Now government ने क्या किया? ठीक है, BBB is not doing. Now this organization is doing, FSIB. All same functions, new name, some legal clarification किया है, that is not much important. For our perspective, what BBB is doing, now it is being done by Financial Services Institution Bureau, FSIB. So if a statement comes, FSIB is successor of BBB, you take it as absolutely a right statement. Okay, now the BBB is not there, FSIB is the new organization that is in use. Go ahead, functions everything same. Whatever you put right for BBB, put right for FSIB also. It is not statutory, it is executive body. It come under Ministry of Finance. It come under. Go ahead. What is SWIFT platform? Will you can send money through SWIFT platform? money you have to settle with interbank operation. SWIFT is only a global interbank messaging platform. Like this is a WhatsApp for banks. Bank has to give information that iska account ko isko de do. That message will be sent through the XYZ platform. Now, what was the recent development? Russia was banned from SWIFT. Now, what will be implication for this? Russian companies will find difficult to do international trading. Baki also same hai. So, rest about SWIFT, you can read the basic facts about it, when it was formed, which organization it is entertained. Is India part of this? India is very much part of this. This you can read from here. So that is end of our banking class. Any issues, any doubts, any confusions? Next class we go with the secondary market, SEBI, insurance, all these sectors. Okay. That's all for now. Thank you so much.